Hello, everybody. It is time we are talking about cost behavior. Cost behavior measures how changes within a business process can affect costs. For example, you may work with a project manager to see how much each stage of a workflow costs before completing a task. If the cost of materials is more than you planned, you may need to reassess the cost behavior for the project. Essentially, cost behavior is a cost control mechanism utilized by project managers and other professionals, and it's a tool for finding the best way to work within the confines of a budget to meet business and financial goals. If there are any signs of volatile changes, then it's best to report these changes in your organization's financial statements on a quarterly and annual basis. And then we move to types of cost behavior. The first type, fixed costs. Fixed cost is where the total cost stays the same irrespective of the number of products produced or sold. This type of cost is independent of the production or sales volume. However, despite the total cost remaining the same, the fixed price per unit changes according to the units produced. For example, the rent for manufacturing 10 units of a product is the same as for manufacturing 100 units. However, the cost per unit of producing 10 products will be more than that of 100 products. And then the second, step cost. Step cost is the type of cost where the fixed cost changes at a particular point in the production process. For example, a warehouse can store 10,000 units of a product. A new warehouse must be rented if more than 10,000 units are produced. The new rent expenses will be added to the total production cost. This type of cost is known as step cost. Third, mixed cost. Mixed cost is a cost that comprises both fixed and variable costs. For example, if the transportation cost includes a fixed monthly charge and a per unit charge for every product transported, it is a mixed cost. And then fourth, variable cost. Variable cost is the type of cost where the total cost charges according to the units of a product sold or manufactured. This type of cost is affected by the production or sales volume changes. The cost per unit stays the same for each product sold or manufactured unit. Example: the number of raw materials produced for producing a particular product will depend on the units of that product manufactured. Thus, with increased production volume, the total cost of raw materials will also increase. And then, how does cost behavior affect profitability? Cost behavior significantly influences the profitability of an organization by shaping its cost structure, impacting cost analysis, control, and management. Understanding the interplay between cost behavior and profitability is crucial for informed decision making and the implementation of effective cost management strategies. When analyzing cost behavior, it becomes evident that certain costs vary with changes in production levels, while others remain constant regardless of output. This distinction has important implications for cost analysis, control, and management. By categorizing costs as either fixed, variable, or mixed, businesses can better understand their cost structures and make informed decisions regarding pricing, production levels, and resource allocation. This strategic approach helps in enhancing productivity, optimizing resources, and ultimately improving profitability. And then, why is cost behavior important? There are a few reasons cost behavior is important. The first reason, budget creation. If someone creating a budget, understanding the types of behavior certain costs have can help them make budgetary predictions. And then the second, cost control. Understanding how changes in costs can impact the company can help managers control costs by making strategic financial decisions from the beginning. And the third, analysis of cost, volume, profit. Cost behavior also helps calculate cost volume and then profit or CVP, which is the analysis of how costs and volume impact profit. And then we move to factors of cost behavior. The factors that influence cost behavior are: the first, raw materials availability and quality used for product. And then the second factor, the production size and its suitability. Third, the location of the business and its nearness to the market. Fourth, the scope of the business. Outsourcing parts of the production process or services to other organizations and the ability to tap sources. And then fifth, the transportation costs incurred for the transportation of raw materials and finished products. Six, the government rules and the taxes imposed. Seven, the power supply used for production and its nearness to the factory where the goods are produced. And finally, the climate and its impact on raw materials and labor efficiency. I think it is enough for this session. Thanks for watching, and don't forget give this channel with your like, comment, subscribe, and share. Thank you.